All of a sudden, people had a real reason to not trust centralized exchanges. The people literally lost all this money, did the thing that everyone said they would do, take it and spend it on stuff that they weren't supposed to. But for us, it was kind of a light bulb moment that the world was ready for DeFi, finally.
Jeff Yan is the co-founder of Hyperliquid Labs, the company behind Hyperliquid, one of the most hyped layer ones in crypto.
That includes a decentralized perpetual exchange with more than $1.5 billion in trading volume per day.
And that aspires to become the Amazon Web Service of liquidity.
How did you get so fascinated by the world of crypto?
Crypto is like beautiful how inefficient the markets are. A lot of people view it as like pessimistically as a failed experiment, but I think there is like a light at the end of the tunnel, which is what we're going for with Hyperliquid. It really is humanity's only hope at reinventing the financial system.
What is Hyperliquid, if you had to explain it to your mother?
Hyperliquid is building it in a way that it meets your expectations of Web 2 finance. It's cheap, you can transfer it, it's instantly settled. I can integrate this with apps that other people are building in a trustless way. Do whatever I want to do with my money, basically. And it's a lot harder, it's a lot scarier because there's no playbook. But for me, working on something super hard is like suffering day to day. But I think you need to suffer. Otherwise, you have this much larger existential dread.
As I said before, your name is Jeff, so it's sort of in your destiny to have to apply the Jeff Bezos principles into crypto. How are you concretely doing this?
I think ultimately it comes down to actually
75% of you that watch this channel frequently do not subscribe. If you like this show and think it provides value to you in your crypto investing journey, can you please do me a favor and subscribe to this channel? Hit the like button and leave a comment below. It helps this channel more than you can imagine. The bigger the channel, the bigger the guests, and the better the conversation. Thank you. This conversation is supported by Jupiter, the most used decentralized trading platform on Solana and the largest DAO in the world. 3. A scalable layer 1 blockchain that's fast, secure, and affordable, built by previous Facebook developers, and that delivers the benefits of Web3 with the ease of Web 2. And Mental, an Ethereum layer 2 that built two products I particularly like. FBTC, which enables you to borrow and lend Bitcoin in DeFi, and METH or METH, one of the largest ETH liquid staking protocols that, by the way, just launched its token called Cook.
Equally here, which is, build a good product that users love, and market makers come to where they can make money, and that's the best. It's the best incentive for anyone. And in DeFi, it's been the same playbook for over all these years, right? It's you get the big market makers on the cap table, they start quoting, you have some incentive program, then they trade a bunch to game that incentive program, and real users come at the end, get the short end of the stick, basically. Don't benefit much from being early to the platform.
You said something that is so simple, but in crypto, it's such a startup kind of sentence, right? You said, we're just trying to build a product that people use and love, which Pudgy Penguin, there's multiple projects, right? That kind of prove that the less money, the better. What do you think about that?
I really think Hyperliquid is in a category of its own. What we're trying to do, I don't think any other project is even attempting. But with regards to whether more or less money raised correlates with success, I just don't think raising money, I don't think it's a negative signal. I just don't think it matters that much. Like, if you can't pay the bills, then probably raising some money is reasonable. But I think in the case of Hyperliquid, I think the goal here is to create a platform on which all of finance will happen. It's a very big goal, and it's one of the only goals where it is a bit path dependent. So if a bunch of VCs come and let's say they own 50% of the network, got in super early, I do think that is forever a bit of a scar on the network itself. And I think with almost all other businesses, this doesn't matter. But if you're trying to create something and the value you're trying to produce, like part of the value you're trying to produce is that it's a new way of doing finance, and it's it's a lot more focused on the end user then I think not raising helps here. And I think we had the luxury, based on what our team's previous background, that we didn't need to raise. And so the decision ended up being pretty easy. But yeah, I think at the end of the day, the product is a function of the hard work of the team and the community. And that's what we really focus on.
Who are you?
In terms of background?
You choose. The question is open.
Yeah, well, I'll start with what we were doing before Hyperliquid, because I think that's pretty relevant. Ties into what you were just asking about. So around 2020, early 2020, I had been playing around a bit with some simple scripts and just looking at centralized exchanges in crypto. And by then, most of the big market making firms had pretty big presences. And I'm told it was actually a lot less competitive before these big guys came in. But sometimes ignorance can be a powerful weapon. And so I was like, let's just see if there's any money to be made here. And turns out there was. And the initial studies were super promising. So decided I was going to just sit down and really build out a system and trade at scale.
On your own?
Yeah, on my own. Initially I worked with a few people here and there, but it was pretty tough to find a co-founder that checked all the boxes. And in retrospect, it was really good because it forced me to learn how to code.
So you didn't know how to code?
I think by some standards I knew how to code, but I didn't know how to write a real system. I didn't know how to really code. And this is a bit of a distinction. I think that really matters for building something like Hyperliquid. That's really like a very large scale technical system. So I think like building a trading system was a really good step. I think if all you know is how to write short Python scripts and do some analysis, there's a very big step from that to writing a production ready latency sensitive system that is handling real money and trading a very large market share in a very like high risk setup, right? Like the strategy itself should be low risk, but you have all this technical risk of like things breaking, your code not doing what it's supposed to do. So learned a lot there. And yeah, by 2022, we were still super big, had basically scaled up to be one of the biggest on a lot of these venues and running. I think for the strategy we were running, we were probably like the best in some sense. Like, the market's a lot of different players coming together and interacting, and there's money to be made on many different timescales. But yeah, just in terms of like pure high frequency market making, we had basically capped out, and we were looking at DeFi and a lot of really interestingly designed protocols. Like I think a big theme in DeFi is that it's like people who don't really know about finance trying to build financial systems, and so leaves a lot for quantitative strategies to sort of make money on. Then FTX also blew up, and so it really just felt like the stars were aligning. It was very obvious that there was something for our team to do, and the two things were, one, that all of a sudden people had a real reason to not trust centralized exchanges. And it's not some like mumbo jumbo intellectual stuff. It was, people literally lost all this money. And it was because a centralized exchange did the thing that everyone said they would do, which is like take it and spend it on stuff that they weren't supposed to. But for us, it was kind of a light bulb moment that I think the world was ready for DeFi finally. And I think I was actually wrong in that like probably a month later, everyone was back to trading on centralized exchanges and it was okay. But the good thing is that it did push us over, like gave us the activation energy we needed to be like, let's like go all in and build this thing. Yeah.
How do we move these people who forgot within a month how dangerous a centralized exchange can be? How do we push them to use crypto the right way and follow crypto ethos?
I think it's a slow process. I think ultimately it comes down to actually improving the product. Where the product here is kind of vaguely defined. It's like money and the financial system itself is kind of the product of DeFi. I think it really is improving that, because at the end of the day, like, most people just care about UX and doing what they want to do. And then there are these catastrophes. People are like, oh, that was really bad. But a new user coming is not going to be like, oh, I remember this catastrophe. That didn't affect me. Let me use that to inform, like, whether I use this like decentralized protocol that's actually shittier than the centralized version that that's really pushing in the advertising and getting me, like, there's just no way to compete purely from a like values perspective there. So it's like you got to build something that is better, and I think that will come.
How far from that are we, do you think? What needs to happen?
I think we're pretty close. I spend basically all my time thinking about Hyperliquid, so I don't actually keep as close tabs. I'm sure there are other exciting things going on in DeFi, but from what we're building on Hyperliquid and what I'm seeing in the community and just sort of like the rate of growth, it's basically the first time that I think real flow is moving off of centralized platforms onto a purely on-chain financial system. There's a lot to build, a lot to improve for sure. And I'm not going to say anything it's even close to being done, but I see that energy that like, oh, Hyperliquid represents something that is not possible and is sort of makes centralized exchanges look sort of like, I don't know what right now, it looks kind of like brick and mortar store, and Hyperliquid's like Amazon coming in or something. I see that energy. I'm not saying we're there, and I don't want to like overpromise or anything, but yeah.
We'll talk about Amazon later. There's an Amazon part, obviously. How much of these flows that you're talking about do you think are... Crypto is a very speculative industry, right? Mm-hmm. There's speculation on token launch, all that stuff, right? How much of that do you think is a product is better versus speculation?
It's hard to say for sure. My answer to that mainly is like, let's see. And people who say it's all farmers or some sort of inorganic stuff. I think they're wrong, but I can't prove it. One thing I can say is the volume has just grown so much, right? And I think usually if it's inorganic, it's very uncorrelated to anything else that's going on. It's just like, oh, this team has some very explicit way where they're basically selling the token by having this translation from volume or fees paid to rewards, and market makers do the math and figure that out. And it's very easy to see if you look at the data. Whereas Hyperliquid, the flow is very correlated with the broad market volumes. Whatever you look at, whether it's total, whether it's volume over open interest, whether it's volume growth day on day or open interest day on day, distribution across symbols, like basically everything points to there being a solid organic baseline of flow. That being said, it is relative to a centralized exchange benchmark. It is also just growing very quickly. So I'm very optimistic about that.
I recorded a podcast with Kiao Wang from Alliance DAO a couple of weeks ago. And he told me that he looks for two main traits to identify a crypto founder with a huge potential. The first one is a certain degree of autism to help you think independently. The second one is a childhood trauma because it gives you a chip on the shoulder. Can you relate to any of these traits?
What was the second one?
Childhood trauma.
Childhood trauma.
Gives you a chip on the shoulder, makes you want to prove something. Where does the fire in the belly come from?
No, I don't relate to the second one. I relate to the first one though, that I think you really need to think about things from first principles. And for Hyperliquid, that we touched on not raising, but I think generally the thing we do from first principles is by default kind of like questioning all the recommended ways of scaling something, because at the end of the day, Hyperliquid is not a conventional business that we're building. So whether that's not paying market makers, not getting investors, the company itself is like not even a company. It like doesn't take fees. It's on chain in that sense. We don't do growth marketing, any of those things. I think just things like if you talk to anyone, it seems there are a lot of people who claim to be experts in growth, or I don't know, like armchair business stuff. And we just kind of reject all of that categorically and say like we are building this thing, like we're a very small, tight-knit team of doers, and we're gonna do what we think is best, and we're gonna listen to users, like real users, not people who talk about what users might want, and we're gonna iterate that way. And it's a lot harder, it's a lot scarier because there's no playbook. But I think time and time again over the admittedly short history of Hyperliquid, I think we've made many innovations, like many firsts in DeFi. And so I think the market's sort of proving that, right? And so I do identify a lot with the first point about, I don't know if it's autism, but it's certainly first principles thinking.
You said you're a previous quant trader, right? And you were doing really well, but it wasn't enough. You told me that the Silicon Valley crowd often makes fun of the quant trading crowd. Have you had this existential crisis where you realized that just having a business for the sake of making money was not enough?
I don't know that it's not enough, but so I guess taking a step back, I think doing quant trading and market making is actually one of the highest impact things that someone who's able to do that can do. Like if you have the skills to succeed in quant trading, then that's probably what you should be doing. It's one of the most meritocratic industries because there's really no bullshit. It's like a system and you're just playing a game against everyone. It's the purest game, and it's sort of the deepest, in some sense, like the deepest real life quantitative game that you can play. It's very hard because a lot of the smartest people in the world are sort of like literally PvPing you on this arena. And in the process of playing this game, it's a bit like Ender's Game. And I was like in the process of playing this like very intellectually stimulating game that's kind of brutal and like cutthroat. Yeah, you're making this beautiful thing happen, which is like this emergent property of deep liquidity on order books. And I think it's actually very beautiful, and the market itself is very beautiful. Like there's so many interesting patterns. There's like an endless dynamic system of like patterns, and there's so much you can find there. There's a reason that like a lot of the best physics and math PhDs go into quant finance when they realize they want to think about interesting things and they want to not starve. But I guess was it not enough? I mean, I think the main thing is that for me, I always had the mindset, like if there's something that I could build that would really improve people's lives in a way that is like more direct and sort of like less marginal in the sense that no one else could do it, then I would definitely just go do that. So it wasn't that hard for me to leave the quant trading stuff behind because I think I get almost all of the intellectual stimulation and more from trying to scale Hyperliquid while still having the benefit of being able to contribute something that's a lot bigger than just this game that our small team is playing.
What did you concretely leave behind to build a Hyperliquid? That is not much for you.
It's just basically it's kind of like the holy grail of the financial sector, which is a high Sharpe strategy that sort of consistently makes money. Like that's kind of like what everyone's kind of after. But
it's not much, guys. It's not much.
But I mean, there's a reason like none of these funds take outside capital as far as I know, or they take it and then they return it because there's like the strategy is like, you know, if you have like a 30 sharp strategy or whatever, you just run it, you know, and then just kind of sit there and improve it. I didn't really leave that behind either because I think Hyperliquid was probably the only time in history that there's this like not democratic, but like broadly available, right? Like accessible way to participate in upside that is of this characteristic, which is like purely alpha based. And this is a very conscious decision from our end because while the collapse of FTX was an important lesson and impetus for us to start, it was also a cautionary tale of what people probably view as the worst part of crypto. And we want to almost like draw as stark of a contrast as possible. And so to the extent that Alameda was taking everyone's money and doing God knows what with it and eventually destroying all of it, Hyperliquid, we were like, we actually understand how markets work and how liquidity can be provided in a sustainable way. And to prove that, we're not going to take these profits, run it through some Alameda style thing. Rather, we're going to have this be built into the protocol. And this was very, very early days. And at this point, it's like not that important. But back then, it was like the thing that got Hyperliquid off the ground. And so in some sense, we didn't leave it behind. We just grew it into something that provides value to users directly.
You told me you tried retiring and traveling the world. When was that?
This was around when I started looking at crypto markets. So basically it was like the markets were like surprisingly inefficient. So it was pretty easy. You could probably just like write some Python scripts and then retire back then. That's how inefficient it was. And so I basically did that and then was pretty bored. I think I'm also like really bad at traveling. So I think some people know how to enjoy traveling. But for me, it's very stressful. Like you need to kind of like go to this new place and figure out what to do and kind of like sleeping in somewhere unfamiliar, like eating unfamiliar foods. It's like not that enjoyable. And then
very inefficient if you think about it. Because everything is new all the time, right?
Yeah.
You don't have a routine.
And it's cool. It's cool to see some new stuff. But if your life is about seeing new stuff, then every day you like, you know, if you like eat some new food and it doesn't sit well with you, you're like, man, I kind of failed at my mission today. And I don't know, it's a very silly thing. And I think some people can like derive some sort of deep enjoyment of understanding the world in different cultures and things like that. But for me, it was just like day to day, I'm not happy. And if I look back on my week, it's like, what have I actually done? I've just kind of like seen these things that are like kind of interesting, but I'd rather be at home building something.
You told me I can get very obsessed and have a very large tolerance for doing what's very hard. If not, it feels super meaningless. Why is doing something very hard necessary for you to be fulfilled?
Yeah, I think for me, there's sort of no free lunch in terms of the human condition of generally getting used to your state of life and wanting more. I think this is like an evolutionary thing that allowed humans to really take over the world and achieve what they have. But it's just like inherent thing in human nature, which is that you're not satisfied with what you have. And I know some people who have this rare trait to be able to be content. And I do envy that. But for me, I think I'm just like the rest of us. And for me, the working on something super hard is like suffering day to day. But I think you need to suffer. Otherwise, you have this much larger existential dread about like, why am I here? And what is the meaning of all this? And I personally would just, for me, suffering every day feels a bit like working out. You know, it's like you can get used to the pain and then that can let you push yourself to new levels of pain and like accomplish more. And then the nice thing about this choice between the ways you suffer is that you look back and at least you say, wow, like we actually like left something behind that that's meaningful and hopefully will be a foundation for many years to come and many projects to building upon it to come. And I think there's like nothing quite like that feeling.
Absolutely. That's a very it's a misconception from a lot of people, late 20s, early 30s. I need to retire, then I'll be happy. I need to reach $1 million, then I'll be happy, blah, blah, blah. It just doesn't happen. I mean, for most people, as you said, right? It doesn't happen. It's actually, if anything, it's just meaningless and depressing after maybe the initial, 1-2 month honeymoon phase of I can do whatever I want, whenever I want. It's all about suffering and, not necessarily pain, but just for me, I see it more as, do you feel like you're wasting your potential? If you feel like you're wasting your potential, probably not going to be happy. That's where this kind of unhappiness feeling comes from. If you feel like you're giving your best, even if it's not working out while you're trying, you're going to feel great because I'm trying my best.
Well, failure does suck too. So it's, yeah. But failure sucks in the way that you can, it gives you an action item, which is like, let me get better. So, but yeah, I agree with that.
I love that. How did you get so fascinated by the world of crypto?
I think I was very lucky to be introduced to crypto in the way I was, which is, here's this very inefficient market. Let's just like look at the patterns. And coming from Wall Street, where it's so efficient, at least US equities, crypto is just, it's like beautiful how inefficient the markets are. And I think being introduced that way is like, you see it as a positive for like all the things that it's missing. And then going to say, okay, like now that I understand everything that's going on, it's not so hard to build any particular thing. And maybe we can just rethink finance, DeFi as a whole and build it from the ground up, like build the L1, build the DEX, build everything. And I think I was very fortunate to like have that trajectory. I think if you just come in as like, oh, I want to build and you don't really know what's going on, I think I think it can be a very depressing place, like full of scams and very short-term oriented people. But yeah, I think at this point, crypto is, a lot of people view it as like pessimistically as a failed experiment, maybe like just an iteration on scammers learning a new way to scam. And I think by and large, it is pretty sad that is what has happened to date. But I think there is like a light at the end of the tunnel, which is what we're going for with Hyperliquid, which is that it really is humanity's only hope at reinventing the financial system. And finance, I think, is one of the greatest inventions of humanity. Money, sort of like representing value in this more abstract way, capital allocation, the economy as a whole, I think, is one of humanity's greatest achievements. Because if we never figured that out, all other achievements would not have been possible because people would be farming or whatever they were. Or they wouldn't even be farming. They'd be like gathering, hunting, right? And I think that's often forgotten because it happened so long ago and it wasn't like one discrete invention. And there have been many iterations, but I think the latest iteration that should have happened was that software should have revolutionized finance, and it didn't. I think software revolutionized basically everything in the world, and maybe finance, maybe healthcare. A few big industries left that have not had meaningful innovation. I think fintech sort of does some stuff, like you can now use an app instead of calling your broker or something. But at the end of the day, the rails are the legacy rails from decades ago. And crypto is a great hope at revolutionizing these legacy rails, because the builders in fintech, Web2 fintech, are very smart people and they're doing very good things. And they're coming out with great companies that are worth billions of dollars. And doing good things, but they're all working within the confines of what the legacy financial system allows them to do. And even starting with Bitcoin and then moving on to exchanges that people exchange, this like new way of sort of enshrining value on chain in a way that no central party controls, and then the applications built on top of that, like the promise of Ethereum to let builders really program money. I think all these are like very beautiful things. It just hasn't quite gotten to the place where it needs to be, which is widespread adoption. And that's what's beautiful about crypto to me.
Hey, when shift happens, family. Time to toast our partner, Divin. They're taking luxury wine to the blockchain with their super fun concept called Uncork to Earn. Buy your favorite wines, enjoy unique experiences, and get an airdrop each time you open a bottle with your friends. Cheers to Divin for bringing transparency, authenticity, and exclusivity to the fine wines industry. High-frequency traders and TradFi people, which is what you were, right? Might be seen as guys who come into crypto just to make money, which is totally fine, and which is what you did. Why do you care about crypto so much?
I don't think it's basically what I said with the previous answer. I think it's coming in. I think there's nothing wrong with coming in to make money. I think by and large, the nice thing about markets is that they let a bunch of selfish people or entities come together, act selfishly, but within the rules of the system, and create value for everyone else in the system. I mean, that's kind of economics in a nutshell as well. And so I think there's nothing wrong with that. And yeah, that's what we came in. That's how a lot of people got introduced to crypto. It's a very raw form of converting your quantitative talent into some financial edge. But yeah, I think just being in this space, probably for years, I had no idea what these things even were. Like I knew how Bitcoin and Ethereum roughly worked, but all these other tickers, like they were just numbers on a screen. But then at some point you start to just become more invested in this thing that you've been interacting with on a day-to-day basis, and kind of get invested in it. Like you start to meet people in the space. I think once you know people, like you start hearing about real problems, and it becomes a lot more personal than when you're just looking at numbers behind a screen. I actually didn't know about crypto Twitter for a super long time. Like I just didn't know I knew about Twitter, but I just had never bothered to make an account. And
you actually don't tweet much. I checked.
Yeah, but now I know about Twitter, so I read it sometimes. I don't tweet much. Don't do many podcasts. I think there's very diminishing returns there. I think some founders probably over-index on the value of the follower count, or I don't really know what metrics they're optimizing.
It means hey man, I'm doing my thing. All this stuff is cool, but I don't really care about it.
There's one podcast a quarter. Isn't that what I said? Yeah.
You said once every now and then, right?
Quarter. Yeah, I think now I think it's good because if you do too many podcasts, you're saying the same thing on multiple podcasts.
Cool.
That feels like a waste of time.
Absolutely. What is Hyperliquid? If you had to explain it to your mother.
Never tried. That's a good idea. She never asked. If I were to explain it to my mother. Throughout the course of human history, there's been a trend towards individualism. And every iteration towards individualism, human rights, et cetera, has been positive by and large in terms of results. However you measure results, GDP, whatever, happiness. And I think this is just kind of another step in that direction, which is going from I need to protect my farm with weapons to I can put my money in a bank, to Hyperliquid, which is, I control my money. It's cryptographically secured. That's just crypto broadly. But Hyperliquid is building it in a way that people can use this system. It meets your expectations of Web 2 finance or legacy finance and does more. cheap. You can transfer it. It's instantly settled. I can exchange value with the liquidity that rivals that on a centralized exchange. Definitely rivals that on, a traditional crypto exchange. I can integrate this with apps that other people are building in a trustless way, borrow money against my collateral, do whatever I want to do with my money, basically. And that would be the pitch to my mom. So, if you want to transfer money to another country, it's a very, very painful process. Even in the best case, you got to get on the phone and call someone, or they just rip you off on the exchange rate. The whole thing is owned by these people whose job it is to make as much money as they can, owning the system that they've been privileged to inherit. So, let's get rid of that.
You launched Hyperliquid and did so without taking a single cent, as you already mentioned before, right? You tweeted, the Hyperliquid dev team does not profit from increased activity as it does not collect trading fees. On the contrary, it is entirely self-funded with exponentially increasing burn. There is not a single private investor, more than $25 million in revenue, has gone back to the community. Another project could have easily pocketed some or all of these profits.
Yeah, and this was like half a year ago.
Yeah, exactly. It was a couple of months ago.
Yeah.
Why are you doing this?
It's so contrary to popular belief. It's not literally like a charity. But it's not a business either in the conventional sense. So it's not that revolutionary. I think it's the only time it's really been done in DeFi for sure, maybe in crypto. But if you look at Amazon, Jeff Bezos famously didn't take profits when he could have for at least a decade. And it's just long-term thinking. For Amazon, it was, it's like your margin is my opportunity, right? And it was growing revenue at all costs and growing market share at all costs. And so there's that mindset for Hyperliquid. But there's more to it for Hyperliquid in that I think crypto is just so extractive as an industry that it's like crypto at every level is just a machine to extract value from retail, and like by and large, and so like we're trying very much to make a statement almost. It's like this is not what's happening here, and because if you look at these very extractive schemes, and they get more and more clever.
Do you want to give some example?
Yeah, so like
the whole process where money is extracted, maybe an example, and then maybe explain how did we get here when crypto ethos is supposed to be very different?
Yeah, so examples, initially was very obvious, right? Like this is before my time, but in 2017, initial ICO craze, it's let's just put out some hype and people buy the token and we have a bunch of token, we dump it and then we leave, right? Like very, very simple scam. And in some sense, that's almost like more excusable because no trickery there. People bought it, like maybe you didn't know them anything. Obviously that people quickly wisened up to that, and securities laws, et cetera, like formed around this. It was just like it was very blatant fraud. Then people, I think the like VC thing is an evolution of the same thing, and in a way that is much harder to pin down from it's hard to say that any specific person is doing something wrong, but a project will, instead of just doing an ICO, because that's very illegal, they will go raise multiple rounds from VCs, get a bunch of people on Twitter talking about it, under the table deals, like basically get as many influential people in at a low price as you can, and then get as many suckers as you can at a launch on, all the big centralized exchanges to come and buy in at this high price. And then, but it's the same thing. It plays out the same way, right? Like dump it, and there's no obligation to continue building after that. And yeah, like no one's going to jail as far as I know, but like, I think it's quite unethical, and it's definitely you're definitely like destroying value in the world when you do that. Like you're lining the pockets of a few people, but you're completely tarnishing the name of crypto and what good it can be used for. And then when a regulator now looks at the industry, they can point to these examples and say like, clearly doesn't work. Clearly it's just this cesspool of scams, and I think like to some extent they're right. And it's sad. And then the reason we get here, despite the ethos you're talking about, is that it's sort of a double-edged sword. Like having the freedom and power and flexibility of programmable money, I think can be used for great good. It can really revolutionize how people do things with finance, because it tears down these walls that really don't need to be there in most cases. But it also makes it much easier to create these scams and sort of take advantage of less informed participants. So yeah, the motivation behind building Hyperliquid the way we've chosen to do it, which is very like community first and anti-establishment, I guess, like anti-VCs, anti-market makers, maybe. Like we're not anti-market makers, we're just like it's not like, because like users are the first class citizens, and everyone else, if you're a user, great. Like market makers, like you're like a very big user, that's great. Like you're not in a class of your own, like some like enshrined entity in the protocol. It's just, it's just a bunch of users, and it's a bunch of users coming together in a peer-to-peer way to do things according to the original vision of crypto. And that's a very big reason we're doing it the way we are. And I think that that narrative really clicked with a bunch of users. I think clicked with a bunch of people who are disillusioned by other projects going down the standard route. Yeah. And at the end of the day, though, it's not that different from anyone else in the world just trying to build a long-term project that creates real value.
You mentioned Amazon a couple of times. Your name is Jeff.
Coincidence.
So we have to talk about Amazon, obviously, and Hyperliquid. Bezos emphasizes a lot about aligning the business with customers and being customer-centric. And in crypto, it would mean aligning the business or the protocol with users and community. Why is almost no one following the Bezos and user-centric model in crypto?
I think it's because it's super hard to get users in crypto, because the main product in crypto is, to this day and age, this is relatively controversial, but I think the main product that people have found product market fit with is launching scam tokens, basically. And yeah, it's hard to find users if that's what you're doing.
I think it's becoming more and more, you say it's controversial, less and less controversial, this opinion. I even heard, Jordy is talking about that. He was talking the other day about understanding the game very different fashion. And there was another dude, meme coin dude, Murad Mahmudov, who was talking about crypto is an asset, is a token production industry. You create a token and then you sell it, right? That's the whole game.
Yeah.
So it's becoming more and more accepted. It doesn't mean it's the right thing, right? But that your view is basically correct, right?
Yeah, and if that's your model, then in some sense, people have really optimized this. Like the users are, I think the users are like the VCs, the KOLs, and the team maybe, and 100%. The other, like who they might think are their users, are just the exit liquidity. And so, yeah, like why has no one else done the right thing, or like what I think is the right thing? I'm not the conventional thing, which is the thing that we're doing, and building something that is a lasting kind of product, is that it's really hard. And I think with Hyperliquid, at least, that we had to innovate so much on the tech. We had to build the whole L1. We basically built like 3 businesses in one in hard mode, because it's like on chain. And that's the L1. That's, it's like general purpose chain. And then it's like an exchange element, kind of like a Binance or Bybit, but like fully on chain and performant. And then like optimizing the full stack of user experience. Like this is like super hard stuff. And unless you do this stuff, users will try your product and just not stick. And so like when you don't have that, when you can't do that the hard way, then I guess you have to resort to these more gimmicky short-term plays.
But you like the hard stuff.
Yeah, I mean, I think all the gimmicky stuff is, I don't think, producing any real value. It's extracting value from the world. And yeah, I mean, hopefully, I think once there are good products, good protocols, like that actually do things that are 10x improvement over what people can do outside of crypto, then I think the users will move over. And then I think optimistically, I think people will have some moral compass at the end of the day and build these things that need to get built to add real value on this new system. I think the finances will also like align there. Like scams are a repeated game and get harder and harder as people get smarter. And whereas building things, there's no catch. Like you build a good product and you did great, and you should make a lot of money, and people should be super happy. And I think we're moving in that direction.
I have to ask something about, you said before, I discovered crypto Twitter. I didn't really know it. We kind of talked about the meme coins, which are at one extreme. And then we talk about Hyperliquid, which is sort of the other extreme, right? We're trying to build long-term value. And what's happening, there's a lot of builders in the space. I mean, it's very hard, you said, right? But there's a lot of crypto builders in the space who are trying to do the right thing, but are so disillusioned, or basically they're not able to get any attention. And because they're not able to get any attention, the value of what's being created is not reflected properly, versus a meme coin or another protocol that would just have more attention. How do you think we get to a world or a place where protocols that are creating the most value for the users actually have that value reflected in the value of the protocol? Or is that not even the goal?
I think it should be a goal. I think if you do a lot of hard work, don't capture any of the value, I think the incentives are wrong. Like people will stop doing the hard work and they will just go and launch meme coins. So I think it's important, but I think the problem is not that crypto doesn't reward hard work and real products. It's that people just kind of suck. Like they haven't built these things. And I think Hyperliquid's like kind of an exception here, not to toot my own horn too much, but like, I think that it's hard to imagine a world in which Hyperliquid doesn't capture a lot of value, like Hyperliquid as a protocol, right? I mean, it is kind of like the only two things that have proven long-term value in crypto thus far, which is like, an exchange and an L1. I do think sort of like no one has really successfully merged those two in a composable way. And I do think that is a multiplicative effect, not an additive effect. But yeah, even taking either of those two things, like Ethereum viewed as like through the lens of a cash flow business, is a very successful business. Like, a lot of ETH is burned every year. Not saying from a legal perspective, just if you look at the economics of the token, I think it's very successful. And then you look at Coinbase, Binance, it's like very successful business. And Hyperliquid is not a business in that sense, but it's doing these things that just like inherently must capture value. And I think people kind of, I don't think people need to overthink it that much. It's like, yeah, you can look at all these meme coins around you and be kind of upset that like they don't deserve the success that they've gotten. But I mean, the market's kind of efficient, right? Like if you try to launch a meme coin, it's actually pretty hard to get it to the state. Maybe they got lucky, maybe they're early, whatever. But like, I think people should be free to do whatever they want. And if you're trying to build something good and you succeed, then yeah, I think you will capture the value, whether it's in crypto or not.
As I said before, your name is Jeff, so it's sort of in your destiny to have to apply the Jeff Bezos principles into crypto. How are you concretely doing this?
I don't actually think that much about Amazon. I think it's kind of a meme, but
it's a good one.
But yeah, I think the long term, I mean, obviously they did a lot of things super well. I think like I have a lot of respect for AWS. I obviously wasn't in the room when those decisions were made back in the 2000s. But I imagine it when something like Jeff Bezos was like, hey guys, I had an epiphany. Like we're using all this infrastructure to scale our online retail business. Like we're like pushing the frontier on product, and to do that, the infrastructure kind of needs to catch up, and no one can do this infrastructure for us. So we're building it ourselves. Like this clearly doesn't only apply to our business. This applies like much more broadly. And there's a bet that tech itself will continue eating the world. Let's commit now and orient, abstract, engineer AWS in a way that people can build on it. And yeah, I think it's like obvious in retrospect, probably not as obvious back then, but probably obvious to Jeff Bezos because he's like thinking about this day in, day out. And clearly he was right. And it wasn't really the idea, it was execution. And I see like a sort of parallel with Hyperliquid, which is like we set out very much with the mindset of we see this thing that's broken in the space, which is exchanges, particular order book derivative exchanges, which users love, and there's none out there that they can really trust at this moment. On-chain, decentralized is the way to go. Let's go build that. And then while doing that, we're like, oh, the infrastructure sucks. We looked at a bunch of chains, looked at running it in a DYDX V3 style, kind of looked at V4, looked at Cosmos, looked at ETH-L2s, looked at Solana. Just nothing even remotely comes close to providing what you need to actually build this very simple product. And the epiphany there is let's focus on the product, but there's also so much infrastructure being built. It would be such a shame if this were like somehow pigeonholed into being the infrastructure for this product. Whereas it's actually quite a general problem. It's like, why can't the world just agree on some state? Like that's like literally all an L1 is doing. And it's very simple when you think about it that way. And like, why can't we just, build it from ground up? Like we know how computers work. We know how the internet works. Like, why can't we just solve this problem? And it's definitely standing on the shoulders of giants in terms of all the research has gone to it, all the production implementations, Bitcoin, Ethereum. But yeah, none of them really I think did it in a way that lets you build an exchange on top. So now that we're building this, why not? I guess going back to the Amazon thing, it's like when they were talking about AWS, I assumed the internet was a lot smaller, and to be able to see that the internet was going to grow and make a bet on that, I think the analogy here is crypto will grow, and we're kind of in a valley, maybe a 10-year valley or whatever, but it is going to grow and is going to overtake how finance currently happens. And the way to make a bet on that is to say, open up the infrastructure on which the flagship product is built so that everything can be built on top. And maybe the slight difference here is maybe for AWS, it was kind of obvious what the infrastructure was, but I think for Hyperliquid, we're also kind of redefining what infrastructure means. So a lot of other chains sort of take for granted that infrastructure should be a general purpose smart contract platform and just make that really efficient. But in building Hyperliquid, we very much realized that that's not the right abstraction, and that the thing that will unlock true DeFi applications to be built is that general purpose infrastructure plus some performant native implementations of financial primitives. And once you have the right umbrella around infrastructure, it makes a lot of sense to abstract it and orient it in a way that people can build. And yeah, I think that's the long-winded answer to how we're sort of inspired by AWS.
So one of the things you are building is what we could call the AWS of liquidity.
Mm-hmm.
AWS transformed the cloud, abstracting away the messy details of hardware to let builders focus on software and business logic. Hyperliquid is transforming liquidity, abstracting away the messy details of the exchange platform to let builders focus on product and user acquisition. With the launch of Builder Codes, Hyperliquid supports a new wave of builders who are excited about lasting proportional upside. Like AWS, the Hyperliquid L1 is a solid foundation that stays out of your way. What is Builder's Codes and why does it matter?
It's a very simple idea in principle. It's letting anyone who builds a financial application on the Hyperliquid order book side, which is just one part of the Hyperliquid L1 as a whole, but just focusing on the order book, which is like, let's just say I want to build a mobile app. Like I have a cool new wallet experience, or I have a social trading experience, or I have a regional exchange. It's gives fiat on-ramp in some local currency, lets you seamlessly trade perps. All these ideas, it lets you basically build an exchange style business while using a backend that is neutral. And what I mean there is you can charge users fees in a way that they processually approve you to do so. And the fees are built into the protocol instead of some like behind the scenes deal between you and like a centralized exchange where you might be doing this. And at the end of the day, this just bridges the gap between all of these user-facing applications, like finance and like sort of like Robin Hoods of the world, and giving them a way to plug directly into what is simultaneously like a Binance level of liquidity, but also like an Ethereum level of neutrality. And I think this will unlock just an entire just new way of building businesses in DeFi, where I think specialization is super good. And people who know their users in a region very well, I think they should go do that. And Hyperliquid just like stays out of your way. And I think another like sort of set of users would be people building DeFi protocols. And these protocols are built in a general purpose way on the Hyperliquid chain, but they too can tap into the liquidity on the L1, sort of enshrined native L1 order book liquidity. And in some sense, it doesn't really matter, right? Like, are you a smart contract? Are you building smart contracts where people can plug and play these like more automated programmatic integrations, or are you literally just the front end, but a very smooth front end that users derive joy from using? It almost doesn't matter. And like Hyperliquid sort of supports both.
You refer to exchange size empires, right?
Mm-hmm.
That could be built on the top of the AWS of liquidity.
Mm-hmm.
You mentioned sort of like Robinhood. Can you give me 2 examples of exchange size empires that can be built using Builder's Code that you would have in mind?
Yeah, I think there are just thousands of examples in the form of regional exchanges. So right now, DeFi it does a lot of volume. Like Hyperliquid does more volume than most tier 3 and probably comparable volume to many tier 2 exchanges, like centralized exchanges. And yet DeFi itself is still so nascent. I think Hyperliquid has literally brought new users into DeFi just to use Hyperliquid. Users who were on a centralized exchange probably just had a bad experience with something there. Say, you know what, like I'm going to try this DeFi thing for a spin, and just like loving that it's like they can then build on top of it. You know, I've seen like people trading and then transition to building and like creating all these like cool apps, tapping into the liquidity. I think it's like it's so interesting to see, but we're still so early because this set of users in the grand scheme of humanity is minuscule. And I think to really like get it to the masses so that, like we we're talking about earlier, like crypto is finance. It's not this like alt scammy finance. I think a large part will be more regional focused applications. So instead of trying to just say, hey, if you use finance, you should consider using crypto, that clearly hasn't worked. You should be like, hey, do you have the misfortune of living in somewhere where your currency is destabilizing and hyperinflating, and maybe you want an alternative? There are many localized reasons. Like, here's an application that speaks your language, both literally and sort of like in terms of the UI you expect. Here's a way to convert your debasing currency into this like on-chain store of value. Here's how you can transact. I think that story will just like happen over and over again. And the right way to get that story to happen is not for us to do it, but it's for anyone to do it. And whoever does it best makes the most money doing it in the most direct way possible, which is like you can monetize on the volume you bring onto the platform. I think that's a very powerful idea. And I think it incentivizes the right kind of builders who basically see that exchanges are the best business in crypto, at least.
What's your long-term view for crypto? And what role does Hyperliquid play in that future? You talked about the long-term game before.
Yeah, we don't, or at least I personally, I find it hard to be super confident on how things will look like in the super long term. But I think I've always kind of lived life with the principle that you can be very confident that you're going in the right direction and execute very well on the one step you are taking at this moment without knowing exactly where you're going. It's kind of like the difference between playing Go and playing chess, which like I sort of, when I found Go, I was like super happy because it was like finally a game that like actually clicked with my like what I like to think about. And so in chess, I think the better you get at chess, the like more moves you read ahead as far as I know about chess, because the board is super small. And like, yeah, so maybe that's the question is like, how is the game going to end in 20 moves? Is kind of like, yeah, I see the checkmate. It's like, I've read out the entire like tree and all the branches, and this is what it's going to be like. And that's kind of the answer that people often want with questions like this. But in Go, they're just like, as a human playing Go, they're just like way too many possibilities. The branching factor is like way larger. And so in Go, the focus is on building intuition around maybe the next one move you're going to play, or maybe like some moves after that. But unless you're like really focused on a local situation you need to resolve and like read everything out, it's very much more like vibes based. And I really like resonate with that. And so with Hyperliquid, it's like, yeah, crypto is going to change how finance works, and like finance is going to move on to crypto. And like the thesis is like Hyperliquid is going to be the platform onto which all of finance moves. But how exactly that's going to happen? Like, what are the apps people are going to build? Like, which regions will come first? Super hard to say, and it doesn't really matter because for us, it's we're just focused on building the stuff that will be important no matter what the trajectory is. So things like the builder code or having an EVM that integrates with on-chain native components. So having like, just having like good liquidity period. These are all things that are necessary, super hard to do well in a sustainable way, and will be foundational no matter how crypto looks in 10 years.
What's something you believe in that most people would not agree with?
Well, like when we decided not to raise, certainly no one agreed with that. But it's also a bit of a skewed sample because I was talking to the people who were trying to throw money at the thing. So maybe it's a bit of a skewed sample, but there also tends to be this thing where like we do something that's controversial and then I look back in a few months and it's like everyone's kind of doing it in DeFi at least. It's like a super small space and I guess it's promising. It means that we're like doing the right things, but it makes it hard to have these like really long-term contrarian takes because it almost seems like as far as like the narrow niche of like on-chain performant DeFi or whatever, if Hyperliquid does something, like everyone kind of just like copies it. So kind of hard to think about. Yeah, like people. I mean, like when HLP launched, everyone was like, "Oh, there's like no way this thing works." Like every single other project was fudding it in the Discord and in Twitter, and yeah, like it was pretty early, so I was still taking a lot of things very personally. You know, like, what do you mean it's not going to work? And just like argue with them, like, here's how it's going to work, and then, I mean, I guess ultimately, like the results kind of speak for themselves.
How did you learn to take things less personally?
Oh, I actually just read the stuff less. I think I'm just like naturally not. I think I care so much about what we're doing that if someone's like, this thing sucks, my like instinct is to like argue with them. It's like, here's why it doesn't suck. And like, so I think I do take it personally because it's like it is the manifestation of like what we're trying to do in this world. And like, it's like our baby, but yeah, I just kind of like don't really read social media, and that helps. Have a good, like, people on the team are much better at handling this stuff anyway. So it's a good thing to disassociate myself from.
Thank you so much, Jeff, for doing this. Thank you for getting out of your basement. I feel very privileged once a quarter.
I listened to some of your other podcasts, little snippets, and I thought they were good. So thanks for having me on.
And thank you for, I would say, like giving hope to the builders in the crypto space and to, I think, everyone who is kind of like tired of what's happening right now, seeing people who are too short-term minded. So it's very refreshing to see someone called Jeff.
There's a lot to do.
Who is trying to do something with a long-term approach, which is so rare in this industry. So thank you so much for doing that, man. That was awesome.
Thank you.